Hello, hello. You guys hear me? Okay. It's another audio issue. Fucking hell. Welcome back. Welcome back to the streams, guys. Yeah. Okay. So I was muted on the live for some reason, but yeah, welcome back. It's Sunday, so it's Psychology Sunday with Silent P. We're just gonna go through an analysis in about 5 minutes here, and then shortly after we'll jump straight into questions. Yeah, I hope everybody had a good weekend, right? Classic stuff. Black Friday wise, yeah, I didn't do any spending besides on TradingView. I bought that subscription. Hopefully, you guys, if you are serious about trading, considered buying that because it does very much help you with analyzing your charts. Um, Unless you do it fully on MT5, and if that works for you, then yeah, fair enough, right? But for me, I basically can't do any trading without TradingView. Not that I'm sponsored or anything, but if you're looking to sponsor me TradingView, it's probably not a bad idea either. But yeah, welcome back everyone. Jack, Houdini, Skirt, Skate, Keel, who's all everybody. Curry 4K, I don't think I've seen you. Mustafa, uh, So MX Station. Yeah, welcome guys. Yeah, we're just gonna be starting very shortly. So today is gonna be more focused on psychology, right? I know I know a bunch of people probably are coming from like on the back end of Don's session today, where we had kind of some breakdowns of how he usually looks at setups and entries, as well as some sort of like back testing simulation with a couple people on Zooms. So just following on from that, like he kind of did more of the technical side of things. We're also going to do technical stuff as well today, but because it's a Sunday, just want to put a little bit more emphasis on the actual psychology side of things because trading is very much half and half, I would say, and depending on what you're struggling with, sometimes I would say it actually is more psychological than actual technical stuff. Yeah, so just prep your psychology questions and yeah, we'll just get straight into it. Welcome, welcome. Bit me some. You're everywhere. I think I saw you in Don's session today as well. But yeah, welcome everyone. 20 odd people in. Pretty good turnout for a Sunday. How do you recover after a huge loss? Um, you know, I would say the main thing is understanding, like, obviously doing the analysis on why you took that loss, right? But with your strategy and everything, it always should be the kind of thought process you should always have is you would take the same trade again the next time, right? Nothing should change because the trade that you took, you should have had, pretty high confidence that it would play out because it's your plan. So if you didn't take that trade, or the trade that you took wasn't, a full, like 100% confidence or a plan, then that's the issue, right? The issue then is you've taken something that wasn't part of the original plan. But if you did and everything is in order, there is no kind of looking to recover from a huge loss. The only kind of psychological element when it comes to that is understanding that your next trade should be of the same quality, which is a high quality in terms of an entry and setup, right? But it should be the same quality as the trade that you lost, right? The quality of the trade should not of the actual trade and position should not change, right? So, we understand we will take losses sometimes, we will take break evens, we will take wins, right? But that's just part of the game. And we will, continue to improve, obviously, our win rate. But as that happens, we're going to take more losses, right? So taking a loss is still normal. So there's no, actual action that needs to happen to recover essentially from a loss in my point of view. But cool, guys. That brings us nicely to 10:30. So yeah, welcome to the 20 people who are here. Thanks for joining us on Psychology Sunday. And we're just going to do a breakdown now. So monthly, still, I would say this is your entire range, right? From 1991 down to 1830. That's literally the entire range, right? From here, previous month's candle did not close above most recent closures, which is at 1991. So it's respected, right? Has a relatively small top wick. We've come up, we filled that top wick, and then we started coming down to create that bottom wick, right? So that weekly came up first and then started coming down. So as it's come down and it's created that bottom wick, are we now we're starting to come back up, right? Are we going to see a break of these highs to retest 2065, 2070 sorts of levels? Maybe, right? But until the monthly actually closes, which is in, I think, 4 days, 4 trading days, right? Until that happens, we don't know what price wants to do, right? On the monthly chart, any given point, price can drive like just completely bearish all the way back down to fill the entire range, which is all the way down to here. So you could break all the highs, then start closing back down, right? But the closure above here, right, would indicate, okay, we're grabbing liquidity for us to come back down, right? So if that happens, right, understand that that is something that can happen because the previous monthly closed respecting. So at any given point, this top wick could just be us grabbing liquidity on the monthly time frame for us to continue down, right? Because we created a low here, right? Now we're creating a high to break all the highs above here, right? Once we break that, then cool. We're looking for liquidity and then we'll look for some closures to come back down. But that's the monthly time frame. Obviously, I'm bullish, right? But I'm bullish, understanding that there's a chance that price can still come back down. Okay, so cool. Now that I'm bullish on the weekly and also on the monthly, let's look at the weekly, right? So the weekly we had a closure, right? So our closure was above 1991, which is also a weekly level, right? You see this, you see these here. So cool. We have a weekly closure that's above 1991. Last time you had that, look at all these, right? So I'm going to use this actually. So last time you had that, right? You had these closures above. You had some lower time frame closures above, wicked all the way up. You didn't close above here, right? So you didn't do anything. You closed above here, you tapped here, right? You closed above here, you tapped here. So were we expecting the weekly to go, right? The weekly I'm expecting somewhere towards around these sorts of areas to get tapped. Around 2045, 2050 sorts of areas, I would say, is probably your target, right? You can probably set your target slightly higher up if it continues to drive, but that's our overall target for the weekly because we're understanding we've come back into the range. This here could be a breakout, grabbing liquidity, just like on the monthly, bottom wick for us to start retesting those highs, right? So as that's going to happen, what are we going to need to see for the weekly if we're going to continue pushing up, right? We're going to need to see a bottom wick, right? Because you didn't close above here, right? We still need slightly more confirmation, right? Because it's still rejecting around here. So high chance that you're going to need more liquidity to break above and then continue driving up, right? So what is that going to be in the form of? A bottom wick for the weekly, right? So anywhere, hopefully we can break these lows in terms of the weekly and then start flipping. Then we'll look for those entries to continue testing those highs. But were we expecting those weekly lows, right? Anywhere in these sorts of areas, I would say. Last time you grabbed liquidity was in these sorts of areas. Let me use a different box. But we came down to these areas to grab liquidity for us to break out, right? Broke out, so we grabbed here. Now we've broken out. Some more liquidity around these areas, if not down at these sorts of areas, to start retesting, right? So just on the weekly, right? I can now draw up, two areas that I'm interested in, right? So one is here, and the other is here. So I'm interested in 1969 and 1950, as those levels show me, especially in like these areas of price action, that price typically taps these areas before you're able to drive back up, right? If it's a drive from 1969, you might get something like this where it will, you have a closure above, grab more liquidity so that you're able to test those highs at 2066, right? But if you do come all the way back down to 50, right? I'm expecting that price is going to create that bottom wick breaking these lows for us to start retesting those highs. So those are my two potential buy areas for now, right? Obviously, we'll refine them as we continue to do the analysis, but that's what I'm looking at the moment. Cool. So daily. Our previous daily closed without much of a bottom wick. We didn't break this bottom wick on, so we didn't create a bottom wick for this daily here, right? We're understanding that this daily has no bottom wick. Any given point, if price wants to continue driving up, there's a high chance we will need to grab liquidity because we're still overall respecting this area on price, like 2005, 2006 sorts of areas. So because we're failing to break out of this area, let's look left. What did we tap before we were able to break above, right? Last time we tapped in these areas, right? So towards 1969 levels, all the way up to around 1978. So this is a massive range, obviously, right? Even though it looks, like small on the daily time frame, but 1978 to 1969, that's like 100 odd pips, right? So because it's so big, right? We're understanding that if price is going to start coming down, we're looking for those buys, but where can we get those buys very specifically, right? The buys probably at 1969 are safer because you're also understanding that last time you wanted to drive up, you grab liquidity here, right? Grab liquidity exactly here. This was the lowest of all of these lows. So if liquidity was being grabbed, it's probably around here. And as it's pushing up, you're probably just grabbing some shorter term liquidity to start retesting those highs. Back in these areas, you don't really have as much information, I would say. So yeah, so not really anything we can look at. And back here, let's have a look. Last time you didn't test, so 1969, how valid is that? I mean, you had these bottom wicks before you were able to drive up, so maybe, perhaps. But I think the biggest mirror that we have is still going to be these areas and these areas. So these are the two areas that I'm identifying as previous price action that we may mirror, right? Just in terms of where we're looking to grab liquidity, number one, and number two, where I'm expecting price to go to just make a decision, right? It doesn't have to go, it doesn't have to tap 969 and then start flipping bearish immediately, right? What could happen is that it will tap 969, come down, oops, it'll come down, right? Test these lows, right? And you might get top wick and then just continue driving down. Definitely could get that, right? Because this is a strong level of rejection on price at 2006. Look at all this. Last time you struggled here for multiple days. So that could definitely happen, right? But because of the weekly closure being so bullish, I'm expecting price to continue driving up. And for that to happen on the daily, right, what is that going to look like? That is going to look like um, a daily, a bottom wick for the daily, and then a breakout like this. So something like this. Hopefully tapping around 1969, but anywhere in this range, we can start looking on the lower time frames to see if there's anything that's interesting, right? So anything like this, where you get this breakout, right? You get a breakout here, and then you start retesting those highs. So that's what I'm expecting on the daily time frame. So let's go down to the 4 hour to see what we can actually see what's actually clear, right, on the four, because now we're starting to come down on those smaller time frames. We're understanding that overall we're very bullish, right? Price as well, I would say our level on the 4 hour is probably around 1922. No, sorry, 1992. I am understanding that this was a nice bottom wick area for us, so I'll just still highlight that, but I'll just refine the box a little bit. So last time price respected 1992 towards these areas, got bottom wicks towards here, right? 1990. So you had bottom wicks towards around these areas, 1990, 1986 sorts of areas, 1987. Now you're starting to retest those highs. So as price is going to come up, right? You've already come up once, you come down, you started to, move around here, but you didn't do anything. I think this was Thanksgiving. As you're pushing up, you have no 4 hour bottom wick here, and you're just pushing up, and it doesn't look like prices grabbed much higher time frame liquidity, right? It seems like a repeat almost of this. So if we do want to come up to break 2006, I'm expecting price to need to grab higher time frame liquidity. So just briefly going back to the daily, that will be a break of these lows, potentially at around 1969. So let's have a look at where price tapped previously when it did. You were in a range between 92 and 2006, right? So this range is still valid. As you're in this range. You haven't come down to tap these areas, but you came down to tap 1980 once, right? You tapped 1980, 69 is all the way down to here. I'm understanding that last time you drove past 69, you had a, kind of a retest, a small retest around here, but then a drive down to 52. So that's where we're also looking at potential buys at around 52, these sorts of areas. Understanding that if we're here, which we weren't before, we may be looking for buys around 1981 because we've now ranged in approximately these sorts of areas, right? We haven't broken above, obviously, but we're showing signs that we want to start closing above, right? As we're closing above, we'll probably need to grab liquidity. If we haven't tapped 1981 yet, 1982, we're probably going to look for that as a first position, maybe. Um, and then I would say if price starts disrespecting these sorts of areas, looking to come down, like looking at these, right? Or like price, like here is like disrespecting all of that, probably more difficult to get buys at 1981, and then we'll be looking more at 1969 sorts of areas. But let's have a look at where price. I'm actually going to move this level at 1969 to around here at 1974. So currently my two buys are 1981, 1974. Let me just refine this real quick, guys. Yeah, it's not bad. Pretty nice. Cool. I'm looking for buys as we start coming up to these, coming back down to these sorts of areas. So I'm understanding that last time price, you pushed up, you got, what I'm expecting is probably a break of some of these highs to start coming down, right? Because it's not showing that we have a lot of liquidity. It's looking a little bit naked around these areas, right? So as price wants to come down, we can potentially wait for a top wick and then a flip of the candle to potentially fill down to 92. And if you get a breakout below 92 on the higher time frame, you could look to take this down towards 81, 82, right? But if price does something like this, right, where you grab that top wick and then you're coming down, so if you break all these highs and then start coming down, I cannot get any buys at 1981 at that point, right? The buys I will be looking for probably more at 1970, so anywhere in this sort of space, I would say, from 70 to around here, this area. So 70 to 74. I'll mark out the bottom of this area as well, just so you guys can see. So yeah, that's the area I'm looking for buys if price disrespects, right? If it's grabbed that top wick and it starts coming down. But in the case that price, it doesn't break above 2002, starts ranging like this, and then just comes down, grabs liquidity, we'll look for those buyer positions to continue retesting those highs, right? But in the case that we do something like this, where you have price doing this, break of the highs, then coming down, I cannot get the buys here, right? I'll need to wait for buys to, if I want buys, I'll probably need to wait for price to do something, right? To consolidate at some certain area, potentially around, let's say, somewhere around these areas. So if it comes down, looking like it's struggling a little bit around these areas, so maybe above 1976, something like this, bottom wick, and we may see some buys to continue up. But that's because you have some minor support at around these areas. So price will still need to respect around 1976 for us to get into any buys, right? If it starts disrespecting any given point, it can start doing this, right? Just start breaking down, start breaking below here, and then you just start retesting these loops, start retesting these lows, right? So at that point, the buys here and the buys here don't make any sense, right? And what you'd rather actually look for is, a breakout to continue further down because you've tapped that liquidity, you grab this, right? You've broken out. I would be looking for a top wick to continue. So, bearish top wick, flip, right? To potentially break some of these highs, something that looks like this. Oops, that is too thin of a candle. Something that looks like that, right? When it breaks some of the highs, maybe generating a top wick for this candle here, right? And then for this to just start filling the next range, which is down towards these areas. You have another range towards around these areas first, right? Here. So, that's probably where you'd close full because it's understanding that price will, most likely come down to fill that range. But that's what we're looking for. So if you get the break of the highs and then you start coming down, I'm actually going to be looking for the sells, right? Sells potentially even below 1992 because you're understanding that if you get this breakout, something respecting, something like this, you can look for the range fill to come down. So just adapt the price when that happens. But currently, I'm very bullish, so I'm understanding that the weekly is going to create a bottom wick first, which is why these buy levels are slightly further away. Right? They're not very close. Um, how far away are they? Just have a look. The buys are like 200 pips away, right? So obviously on the smaller time frame, you're gonna potentially grab some liquidity to come down, right? And then potentially grab some more liquidity. And then if you do something like this, right, on the lower time frames, cool, I'll look for the buys to go up, right? But on the higher time frames, what is this gonna look like? Probably get something like this, right? Some smaller liquidity, not breaking all the highs maybe, but like a wick to come down, right? A wick to come down. And as you're coming down, it's just a clean push down, and then we'll potentially look for those buys. But that's what the higher time frame would look like comparing to the smaller time frame. But those are currently the buy positions. I am conscious that we are probably going to look for some sells to come down. It's pretty straightforward for me. I'm looking for sells here. So I'm looking for sells once you break these highs. Um, Understanding that the last time we were able to break these highs, we didn't have a full drive towards 20 whatever, right? Because we're understanding that if you are going to drive towards these areas, probably need more liquidity here. So I'm going to take some sells at around, yeah, like this is not bad. Let me go to the hourly and refine this. Oh, it's looking pretty clean, I'm not gonna lie. Yeah, some sells here at 2011.99, right? And if price wants to continue pushing up, guess what? You will be able to get out at break even, most likely. Why? Just you just look at this, right? Pushed up, cool. You're gonna need to grab short-term liquidity before you're able to push up anyways. So as that's happening, you can just get out break even or get out at this bottom wick, which is like 30 odd pips, 36 pips, 37 pips, right? So that's the position we're looking for. And obviously stop loss is going to be, probably above like some of these highs, or at least above this, right? Obviously above all this, but potentially above this here, right? So around 120 pips. Now, I would say that's a pretty nice position to take because as you're breaking all these highs, you understand that you're in this range, right? What I'm expecting it to mirror is, it needs to grab liquidity to here. So before you can do that, you tapped into these areas. You tapped into these areas, get those sells to start coming down, retesting these lows. And as you're getting these buys, right, you're going to start looking for, that weekly has created that bottom wick. Daily has, potentially closed Monday. You're looking for that bottom wick to start, be liquidity for us to start driving up in terms of the higher time frames. Your monthly is looking like it wants to close bullish above the range, right? So all of those things will start lining up as you create that bottom wick, which will likely be a bottom wick for the monthly as well, right? And as that happens, right, what we'll see is hopefully something that looks like. Let me just draw it all out. So potentially, let's say you're still in this range, right? You do something like this, potentially something that looks like this, right? As you come up, create that bottom wick, coming down towards these areas, and then maybe respecting, right? You're respecting here, respecting 1981, and then as that happens, right, you maybe get bullish closure, looks something like this, and then you may get some bullish, sorry, some bottom wicks for the bullish closures, start retesting those highs, something that just breaks the lows, right, and then starts retesting. So that's essentially what I'm looking for in terms of price at the moment. So all the positions that I'm looking for sells first, right? Sells to come down. So these first, these, once this respects some area, right? It doesn't have to be 1981. Even if it respects 1992 and then starts coming down, right? Like if it does something like breaks the highs and then you start ranging here aggressively, right? And then you get a breakout, maybe something like this, then we might look for those buys to continue once you kind of see more structure being formed because you have to adapt the price at that point, right? But in general, we're understanding that daily is going to create a bottom wick, right? Weekly is going to create a bottom wick, right? Your monthly is coming to an end, so it's likely to create a bottom wick, right? So all of those things mean that sells are probably going to happen first, but I'm still very bullish. So those two things I would say are the key points from today. Um, Let me just see where this level could potentially be actually. Yeah, I mean if you respect around these areas, it's good for the buys around 1970 even. Probably move this up to here and put this as a buy. I'll get rid of 74. So 81 is very is only if you get very specific areas getting tapped. I'd say either 84 or like down to 79 here. I'll move this down to here, guys. Let's have a look to see what this looks like on this time frame. 70, 79 is down here. It's not bad. It's not bad. Yeah, anywhere like that. 79, 71. So yeah, 79, I'll need structure, right? So for example, if you're ranging like this, right, and then you start coming down, what we'll be looking for is slightly more aggressive, which will be this. Where you have that tap of the zone, get in, get out, right? Very quick. You definitely break even as you're, coming back up to the 1983 anyways, because you're understanding that as it's doing that, this could just be top wick for us to continue ripping down. In this case, it was, right? But then once you start settling, right, you're respecting around 1979, potentially towards 1976. As that happens, as this happens, as this range happens, right? And it's looking like, oh, okay, you're pushing bullish, right? Get a bottom wick towards 71, we'll be looking for those positions to continue pushing up because we're bullish. 71. Yeah, 71. What's that range? This came out to fill the entire range. Okay, I'm going to move this down to exactly, because this is a very specific entry, guys. Gonna have it right here, 70.472. So these are just, if anything, you don't, even if you don't agree, right, with exactly buys at these areas or whatever, yeah, look at this. I didn't even look at this, but yeah, 70.4772. So these are areas, this level is an area that price is very likely to make a decision at, right? Whether that be price just wanting to continue ripping down, but it needs liquidity, or price is going to start reversing this area because that's where price needs to grab liquidity on the higher time frame for us to start retesting those highs, right? So that's essentially what I'm looking for. Yeah, they're relatively safe, and you're a little bit far away. I think the sells will probably happen first. So reasons why you can't just take a buy right now or off the rip is because any given point, these dailies, last couple of dailies, don't really have bottom wicks, right? You could just start coming down, grabbing those bottom wicks first. And if that does happen, right, you could get some buys towards 79 to start testing 2012, 2011 sorts of areas first because you need liquidity to come down. But we're expecting price to be very bullish anyways, right? So if it does come down to grab liquidity first, it'll just start pushing likely. Um, but yeah, and you can't take a sell, right? Because at any given point, price is very bullish, it's going to start pushing up. So this entire area for me, from I would say like from here to at least like here, is a no trade zone for me. And why do I say here? Because that's exactly where that bottom wick was. So this entire area, I can't trade. And this is at 1986. Once you start forming structure and in these areas, you break some highs and then potentially close below 92 or like 86, then cool, I can start looking for positions there. But at the moment, based on price, I cannot do anything. There's nothing I can do in that area. Yeah. If you do break below 1990, I'm expecting price to come down to 79 or 70. So depending on if it has a top wick, we could be looking for the sales to come down. But cool. It is Psychology Sunday. I need to keep reminding myself of that. But I'm gonna allow some Zoom boys to just to come on the streams and ask the questions that they want to ask. Hello. You guys can unmute, I think. I always seem to close my positions too early. What percentage do you think I should use to close? So it's not about, what percentage you want to close at, right? It's not about any of that. It's more about where is price likely to reject next, right? So for example, you were in a buy, let's say just this was a daily time frame, but let's say you got a breakout above, right? As it was coming up, you potentially had a four hour breakout above. You have a stop loss, which is below around here. As you're coming up, where are you gonna go break even, or where are you gonna close full, right? You're gonna go, break even at least towards these sorts of areas, right? Because understanding that there's a high chance that prices could reject here. So it's not down to how many pips or how much percentages you've made that day. It's all about where is price likely to reject. Because if it rejects here, right? If you've got to buy here and it starts doing this, rejecting, then cool. Like you could have taken full profits here, right? So understand that, and then understand like, okay, so this is X percentage, and that's just a risk management question. But where you're closing full should not have anything to do with money and percentages. Oh no, yeah, yeah. So I have evaluated it multiple times, I think. I evaluated the breakdown like 3 or 4 times now. Today's breakdown is actually, I would say, 8.5. 8.5. What's
Yo,
up, Jacob? How you doing?
what's up, bro? Good, how are you?
Yeah, 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 good, good. You had some good questions and simulation with Don today.
Appreciate it. Yeah, I think I just got lost, like seeing entries, but
I think it was good. Like you definitely like you've seen yourself improve, right? You feel it.
yeah, and I think also I wasn't confident with saying wick entry, but I kind of in my head like that's what I would look for. I feel like,
Yeah, 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 yeah.
but
Yeah.
I had some positions on Friday.
Oh yeah. Did you have positions other than Don's positions?
No, it was before. Well, I
Oh
took
yeah.
it straight, but I didn't take it on my trading account. I took it on. I took his on his
Okay.
kind of take it straight. Yep,
Yeah,
it
yeah.
was. Go to the yeah right there's fine. Just go to current price action. Zoom in a bit. So once we were arranging here, once this candle closed like doji, the one before the bullish one, before the
Yeah.
bullish closure, I had two scenarios, right? So I was looking, if you want to look left, I was either thinking we would get a bullish closure like we did, and then something like that, and then bottom wick and then up, or I was looking for something, like this. I don't, I, and then like I forgot what levels I was looking for, but I was looking for like something respecting bearish and like drive down.
Oh, okay. Yeah, yeah. So
Um,
did you take a sell or a buy?
I took a sell, and then once that next 4 hour opened up, we kind of just we dropped down to the 30.
It was just messy as fuck here.
Where was that? Go back to the 4 hour and then draw the rectangle over to highlight it, and then drop down.
They're like these two candles, right?
The it was what 30 is? Oh, okay. I took right here once this closed, and then we kind of just came up. I took a sell here.
Oh, you took a sell. Okay.
Yeah, and then I
Yeah.
exited at 10 pips. But then I took that position, and the next 30 opened, and it just came up. I think I I wasn't confident in that position either because it
Mm.
was like right after trade. I kind of just wanted to take another trade because I didn't like. I don't think I had like planned out the trade. I just seen okay top wick. We opened up top wick, no bottom wick first, so I just took a sell. But I don't
Yeah.
think I probably on like if I would have done my analysis on other time frames, I don't think I would have took it. But I'm not sure.
Yeah, fair. I mean, what I could see from this, right, is once you had these doji closures like this, like it's very difficult to do anything because you know how we always say price like pushes and ranges and breaks out for liquidity and then continues, right? So for example, like like these areas, right? You have range, breakout liquidity, fake out to start going up, right? So similar to that, but it's just the 4 hours. So on the 1 hour or like the 30 minute, you just ranging, right? This entire area is just a range. So what I would say is it's risky to take any trades in this range, because at any given point, right, if you're expecting a drive, right, you're expecting the same thing as this, where where did it go? Like this, right? We're expecting it to range and then a breakout, liquidity to start going up. So any given point, I guess that's what you were looking for the sells potentially. Um, let me just But any given point, price could have just done something like this. Obviously, it pushed up with no bottom wick, but we would be expecting something like this, right? And we could look for those buys above here. But the sells also you can't really take because you did respect here, right? You respect this level, so you never got a breakout below on the 4 hour. Like the 4 hours struggled, it came all the way down to here, like, and then it just closed doji here, and then it came down again, closed doji, came down again, closed doji. So when it closes doji so many times, it's kind of like you don't know which position, like which direction it wants to go. So waiting just a little bit more for that, confirmation in the form of like a bottom wick potentially to go up is what we're expecting. But in this case, you don't have that bottom wick. So if price wants to continue up, which is why our analysis sells first potentially, you will need to create a bottom wick, right? Something that looks like this to start retesting those highs. But you haven't broken above here yet, so we'll see. We'll see. But I am expecting some liquidity to get grabbed below here for sure. Like definitely below here, I'm expecting. Does that make sense in terms of like why I probably might have not taken that position?
Yeah,
Yeah.
I don't think like in the future I don't think I would take something like that either because I don't think there's just enough like how I don't think Price had did enough for me to actually understand it. Yeah,
Mm.
you could say like that position like maybe I could take that again, but I don't think I would.
Yeah. 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 Well, that's fair enough. I think. Yeah. As long as you know, it's fine. But yeah. Essentially, that's it. Um, any psychology questions? I guess Tom and Johnny are here as well. Hey guys.
Hey, how are you?
Yeah. Good. Thanks.
Okay.
Any?
I guess one question I can think of is how do you sort of hold yourself um, accountable and sticking to like the best setups that you find? Because sometimes if like it's not a trade all day, when it gets towards like the end of the trading session, I sort of find myself trying to force the trade just for
Mm.
the sake of taking one. So what do you do to sort of stop doing that?
Um, I think that's where experience kind of comes in. So over time, when you take enough trades which are like just at the end of like the session or towards the end of the session where volume starts dying down, you'll realize that 9 times out of 10, those trades will just give you anxiety because you're holding them for 3 or 4 times the amount of time. Plus, it doesn't go anywhere, so you're just constantly checking. And plus, when it does go somewhere, it pushes really irregularly, right? So, it just experience wise, it would make the most sense if we just didn't take those trades, I would say. Um,
Yeah,
and like over time, I feel like as you continue to gain those, because taking those trades technically, price action wise, it's fine, right? It's just you'll understand there's lower volume and you probably won't get a push until later on, right? But if that's like a perfect price point and that's like exactly what you were looking for, then yeah, maybe, right? But over time, you'll kind of adapt to what the experience tells you. And in my case, I still occasionally will take those longer uh, like after like a whole New York session, towards like what 5 6 p.m. London, I'll occasionally take those trades. But then psychologically, I know I'm probably going to be holding this for ages. If not, I'm probably looking to get like a quick 10 pips and then leave it.
yeah.
Yeah, but like in terms of the actual trade idea, it might be completely fine, right? Um, but it's just you need to like trade with volume. And then regarding taking like, setups and entries which aren't exactly like the highest quality, I think that will just happen. Like it's not something even I can avoid at my stage. Like, I'll see something that looks, like a setup, like an entry, and it makes sense to me. But only at that point, I've entered the trade, and then over maybe like the next 10, 15 minutes, I then realize, oh shit, like this doesn't make sense anymore, right? And then I'm like, okay, so how can I manage risk at this point? But like occasionally I'll still take those. And when that happens, right, you're just in more drawdown for a while. But understanding that overall, your trade idea will probably get you out of break even if it's like in line with, like the strategy that we've been trading with. So, for example, if you take like a buy, right, at like these sorts of areas, if it wants to continue down, anyways, you'll probably come up to grab liquidity to come down. So, looking for those opportunities to exit, and when those opportunities arise, you need to do another good analysis, understanding that okay, price is now bearish, so I'm going to be looking to exit full instead of holding. So previously, I think in the past, I would just hold because I was like, oh yeah, so it's come back up. It means that it's probably going to continue up, right? I can make like a 10 pips or whatever. But a lot of the times, price structure has completely changed. So you need to do an analysis based off of what actually happened, and then evaluate if you should still be in the trade or if you just should like exit it completely. Yeah.
Oh, okay. Yeah, that makes sense.
But I
So
think a
I
lot,
would say,
yeah.
go ahead.
I would just say like generally a lot of it does come down to experience. Like you're only able to take the best trades that you think of, right? So don't try to like doubt yourself when it comes to like, oh yeah, this trade, like, is it really the best trade? Because, even like if you're looking at the charts, right, you see a setup and entry that looks perfect to you, right? It might not be perfect for Don, it might not be perfect for me, but at your stage, it is the perfect trade for you, right? So for your growth, it is best that you take that trade and then gather experience based off of what you think makes sense.
Yeah, yeah.
Yeah.
So do I? That's what I'm kind of struggling with too. Like, how do I journal these trades I'm taking?
In what way?
Do I journal them
are you journaling
in terms of
trades?
putting them down as like I guess I like something that's already on the journal?
But as in, like, are you struggling with the entry side of it? Like, how do you actually physically enter it, or is it like it's not the best setup that you have taken, so should you enter it, or how should you enter it?
I would say in saying that, I guess I could say I don't really know my entry. But that's the thing. Like if, like you said, how I see something. Like, do I just journal that? Like, I don't know if that makes sense. Like how you said, we'll kind of for our stage, we'll see something, but it's probably not aligned with everything else that we're trying to trade with the strategy.
Yeah. I would say like with the way you're like with the trades that you take, just journal them as if they are like the best quality trades that you can take at the moment. There's not much you're able to do in terms of like, if Don's taking a
I
trade,
don't know
yeah.
what your mic is doing, but you keep on like turning really quiet.
Oh, I mean, I'm still in the same spot. I don't really know what's going on. But yeah, like essentially, yeah, I would say just journal them as if they were normal trades, and then over time, your trading strategy will improve. Like the quality of your trades will improve, and it'll just be reflected in the data. Don't worry too much about like, oh yeah, this trade is probably not like the best trade I've ever taken, but you know, as you continue, like the trade at that point should be the best quality trade that you can take, right? In your own kind of thought process. So just yeah, don't worry too much about the rest of it. Just journal what you can, and as accurately as you can. Does that make sense? Can you guys still hear me?
Now I can.
Oh, did you guys not hear anything just now?
For like 15 seconds, I couldn't.
Oh shit. Yeah, I was just like a quick summary is just like um the trade that you've taken at that point is the best trade you can take, right? In terms of the quality that you know. So just journal it as if it was like the best trade you can, accurately, right? As accurate as you can.
So if I was seeing like say a fake out, just journal it as that, right?
Yeah, I mean, what else would you journal it as?
Right. Because then if I'm not journaling as a breakout, fake out, or something, that means I really didn't have any idea.
Yeah, no, 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 but like for example, right? If it was a breakout in your idea, but it turns out to be a fake out, you still journal it as a breakout. Because
Yeah.
when you journal it as a breakout, you're understanding that okay, you've taken a breakout which you see as a breakout. So the next time you do a similar breakout journal, it will be a similar setup to the one that was a fake out, and over time you'll see what your breakout win rate is.
Yeah, that makes sense.
Yeah.
I have one. What would you say is harder psychologically, doing a trade when there's not a lot of volume and it takes ages to move, or like a high volume trade?
Oof, I think they both have difficult areas. They're both difficult, and psychologically, they're very different. So a low volume trade, you're just understanding that if you're okay with holding trades normally, um, and just kind of understanding that okay, this is I have a stop loss, I have a TP. You might have to move it if it's like at the end of the week and there's spreads or whatever. But as long as you're okay with holding it, then you should be fine for low volume trades. It takes experience though, because you might think you're fine, and then as price moves against you, low volume, you might just be like, ah, shit, should I just exit here before it starts spiking down or whatever. But when it comes to high volume, I would say your brain needs to move quickly. Like the amount of analysis you need to do in a short space of time is quite a lot, because price will move very quickly, right? And like as each 5 minute candle is closing, or as it's breaking the highs or breaking the lows, shit's gonna change. And as it changes, you need to have a completely different analysis sometimes. So they're different. I would say they're difficult in different ways.
Okay.
Yeah.
What one would you say you struggle with more?
What would say I struggle with more?
Yeah.
Mm, I mean, that's a great question. I think in terms of analysis for like high volume, I'm typically quite good at that. When it comes to holding trades, later on in the day, it really like for me the biggest barrier is actually just I have something to do at that time, so I can't manage to trade it. And like at that point, I'm like, okay, I need to find Wi-Fi wherever I am to try to look at the charts. Um, but in terms of what I'm actually working on is just refining my own trading style. So I now have a strategy that works, the analysis that, plays out most of the time, but it's just finding a way to make that into a profitable version of itself through, funded accounts until I can actually have a full live account. But, but yeah, that's the only thing I'm struggling, not struggling with, but working on at the moment, I would say.
Nice. What funded do you use?
What was that?
What funded, like what they called, like, company do you use?
Oh, so I use ACG. I think that's Alpha Capital Group or whatever it is. And like I think back in Miami when I was at the in person, um, Bougie was there as well, and he kind of taught me a little bit more about because I didn't know anything about fundeds at that point. So I was just like, oh, cool, like I'll just buy a funded. We'll see, what happens. And then I started off with like a 5K funded just to test how fundeds work, and then as it continued, I felt like it's probably a better way to spend my money instead of like trading like a 1K live, which will give me very, very few profits, right? So if I'm able to adapt the strategy for a funded, then I can build up that live account much quicker. and then after that I can trade a live account with like, I don't know, 10K, 20K, or whatever it is.
Yeah. Makes sense.
Yeah. But like everybody will trade differently, I think. Like funded's not the only way. Obviously Don's trading full live, right? But yeah, funded works. It will work if you find the right strategy for it. Um, but because we typically have bigger stop losses based on like if price does break that level, it's probably going to go against us aggressively. Um, so yeah, just either risk less or adapt your strategy, I would say. And risking less is not really a problem. Like if you're still making money but you're just risking slightly less, then that's still fine.
Yeah.
Mm, 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 mm,
Anybody else got any questions? I'll look at that YouTube live really quickly.
Oh,
So
nothing. I thought I had something.
Panda, you've been a sell since 1999. When did you take that step? Take it here? If you took it here, man. I mean, I don't know, like where did like it depends where you took the position, right?
Oh, for my buy, the one that I did take a L on, because the first one, or from yeah, no, for my sell, because the first one I had took a dub.
Yeah,
The second one, my stop was at 2029.
your stop was
And
at 2029.
no, wait, I'm tripping. Wait, what am I reading?
Huh?
2019. I'm tripping.
2019?
2000.19.
Oh, okay. Oh, okay. 2000.19, which is like, I mean, you would have got hit stops. Oh, so around here, right?
Yeah,
These highs.
yeah, but once we closed like bullish on that 4 hour, I was like already like I wanted to close the trade already.
Yeah.
But it makes sense. Like I don't know why I did take a sell there. It was such a
It's all right though. Like, as like you've been identifying a lot of trades that you probably not like regretted taking, but like probably wasn't the best idea to take. But the next step is just, identifying that before you get into the trade. So doing like that full analysis before. It's easy to cheat the analysis and then just get into a trade because you want to be in a trade, right? It's very easy to do that. Like I can just enter a position right now, but it doesn't mean that that position's good. And then that'll just make me want to think about the position a lot and worry about the position a lot more. So I'd rather save myself, like all that worry and anxiety, and actually do the analysis beforehand. That's why, like, I might actually. So previously, I was taking more trades than Don, so like maybe 3 or 4 trades a day typically. It was working out, but then occasionally I would be like, oh, okay, I'm in this trade, but it makes sense on like the smaller time frames, potentially up to the hourly, but not really as much for the 4 hour and the daily. And at that point, it'd be like, okay, so are those trades as valid, right? Should I just be looking to take that one trade per day or whatever? But yeah, over time, the strategy will just adapt to what my own trading style is, and it should adapt to what your own trading style is as well. If trading 3 or 4 times a day for you makes the most sense, then yeah, do that, right? But if it's just once a day, then that also works. You've been selling since 1999 before market close, so like somewhere around these areas. I mean, depends where your stop loss is. If your stop loss is above like 20, I would say like, yeah, above like 2013 sorts of areas, like if it's above there, then yeah, you're probably fine because eventually I'm expecting price to come down to form that daily bottom wick, weekly bottom wick, and so on, right? How do I identify bias? So it's if you go back to the beginning of the stream, we did an analysis on what the bias is for each time frame and how that aligns in total. So generally, you're looking at closures, right? How if the closures were bullish or bearish, if they closed above or below ranges, if you've grabbed liquidity or not. So all of those things, you know, contribute to identifying a bias. What's the average drawdown on each trade? It depends on the trade. There's no average drawdown. If we're in drawdown, then we're in drawdown, right? But we don't like get into a trade expecting drawdown, because if we know there's going to be that much drawdown, then why don't I just take it after the drawdown and then take advantage of the drawdown to actually be profits anyways, right? You've traded 2-3 weeks starting with $100, now you're like 400 something. Yeah, I mean, I'm not going to say anything about that because you are on your own journey. Um, but understand that, there is a strategy for a reason. You might think you're better than the strategy at the moment, but we all get humbled at some point. But maybe you're that 1%, maybe you're that 0.01%, and you just, turn $100 into $100 million in like 3 weeks. But yeah, if you
Right
do,
now, I lost this money. I don't think it's possible.
yeah. But like we all at some point think like, man, it's just like one flip away. It's not that bad, right?
Yep. That's crazy, bro.
Yeah, it's crazy. But you're now a better man because of it. So yeah. All right, cool. I think I'm probably gonna end around here, guys. We had some good psychology questions. I'm proud of you guys. But we'll be back tomorrow. It's gonna be a Zoom members only tomorrow, so make sure you guys join up. But yeah, for the YouTube live, I'll see you guys on Tuesday. But yeah, cheers for joining up, Jacob, Tom, Johnny, and I'll
Cool,
speak to
cool.
you guys
Peace,
tomorrow.
bro.
Thank you.
Cheers.
Yeah, yeah, yeah. Cheers, guys.
Yeah.
Yeah, everybody on the YouTube live. Thanks for joining up this Sunday psychology Sunday thing. Um, we won't be back tomorrow live because there's a members only stream. Um, but if you want to join membership, just DM me on EvolutionDVS on Instagram or on Discord. You can find me as well. I'm one of the moderators in DVS anyways, so you can just ping me. But we will be back live on on Tuesday night. So as that happens, you can just, come in, prepare your questions and whatever. But yeah, that's basically it. So thanks for joining, everyone. And I hope you guys have a good rest of the evening and a good trading day ahead tomorrow. If you are trading Wix's session, make sure to have a stop loss. Make sure to understand the analysis, and blah blah blah. You will know that jazz, right? So cool. I will speak to you in 2 days. Take it easy.